Wednesday, April 15th, 06:20 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. We are now in the middle of the month, which is the first month of the second quarter of the year. We've been having earnings. Since it's pre-market, that means the stock market's not open yet, but the futures markets are. Here are the equity indexes. Equity indexes refer to the stock indexes that trade in the futures market. They're all red right now. Yep. I want to go over the stock sectors. There's 11 stock sectors. These are the stock ETFs, trade regular market hours. We're going to compare those with the S&P 500. The S&P 500, the go-to stock index. This is a 2-year chart history. Each candle's a week. The current candle won't be done till Friday. Take a view of the chart from the low to the high. Look how the price range has acted. The low, 2025 for the past 2 years. So the low, when we went down there, we had huge trading ranges. That means the prices had a wide range, and it got wider as we went down. Now, beginning of the year, the high of the year, the all-time high was up here. Very small trading range these candles made. It also did a consolidation. What did it do before that? It also did a consolidation. Bigger range. But the range here, how wide those candles was huge. We have a gap here that has not been filled yet. And then we've done these staircase pattern highs. Smaller range. Well, again, we had this huge sell-off, reversal, nearing the highs again. Well, to break out of here, this consolidation, we want to see strength. It hasn't broken out yet. And when we break out there, you want to see a continuation of these big candles. If not, it'd be more likely a divergency. And you would see a return to the downside. So here was a consolidation last year, the beginning of last year. We broke out of it on strength. And we had a continuation. Now let's go look at the stock sectors. See how they're performing. Which one's doing better, worse, or the same. XLY. It's underperforming. Big difference. It is trending up, but it's underperforming the S&P 500. XLY. Same thing, underperforming. Again, these 11 sectors make up the S&P 500, and the ones that are performing weak are hurting it. XLU. Yep, it's in a huge consolidation here. XLRE. It's very poor. It's still below the highs of 2024. So it's worse, much worse. All these are underperforming so far. This one's much worse. XLP. Yeah, it's in a decline. XLK. Look, it's underperforming, still below the highs of last year. XLI. Underperforming compared to the S&P 500. We'll see if it changes because it has a lot of momentum to the upside. But the current candle week is now in the key zone. That's a potential reversal area or pause. XLF, the financials, which has big earnings this week and many today. Yep, it's underperforming the index. Look at all these so far, underperforming the index. So what's making the index go up? Well, give you some insight. These stock ETFs represent different average ratio, weighted average, that is, weighted average of the S&P 500. Some of them represent a small portion. XLE, underperforming. Look, it's declining. XLC, Still underperforming compared to the index. And XLB. So again, the index is the bigger leadership right now. But understand, there are several stocks in here that's giving it the big boost. So these stock ETFs I just showed you on the left, these sectors have several companies in them. And some of them represent a big average in this index. Again, diversification, the S&P 500, 500 companies, very diversified index. These sectors, they represent just a part of the S&P 500. Thank you as always. Spend just a little time with me. That's it for the video. Thank you for watching. Thank you for your support.